All right, guys, welcome to today's session. We are locked and loaded. It's your boy Nigel here for NAS100 training indices breakdown. If you're watching this call live, recorded, YouTube, Zoom, whatever the case, welcome. All right. Typically, I trade Monday, Tuesday, and Thursday, NAS100 at the 9:30 EST candle. All right. And when I trade on that time frame, you guys know the market goes crazy. All right. It goes up and down. And we got some folks that have been trading with us for months and weeks. We have other people that have been here for years. All right. So over this call, we're going to do a good job of kind of being able to tackle things that everybody could use, and we can walk out of here being better. All right. Especially as we get ready for the next trading day. All right. Like I said, my name's Nigel. All right. I'm 26 years old. I've been trading now for the last 6 years. All right. I remember my first time putting a trade into MT4. Just like a lot of folks, I've had struggles in the market. All right. And it hasn't always came easy. I think one of the things that helped me stay focused is my mindset behind dealing with money. All right. Understanding the concept of the stock market, understanding the concept of making money without exchanging time like you traditionally would do at a job. And so for you guys that are watching this video, regardless of where you are in your journey, somebody that I see folks on this call making thousands of dollars a day. I see folks, yo, let's take in, demo accounts. All right. Understand this is a 10-year sprint. This is a 5 to 10 year sprint. And all of you all, 90% of you guys are doing way better than I was when I first started. All right. So I want to just keep that in mind. Like, in order to be cut out to be a great trader, you have to have the mental discipline. You have to have the toughness. All right. You can't be afraid to lose money. If you're afraid to lose money, this is the wrong type of business. This is the wrong type of activity. This is the wrong type of hustle. Because I haven't met any trader that has never lost. All right. Never, no, haven't met any trader that's never lost. So that's one thing that I want us to keep in mind. The second thing is, as we start to kind of transition into some chart work, all right, you want to get to the point where you are having your own experience. All right. You want to have your own experience. All right. And just because this is a training call, one of the questions that I get asked that really frustrates me, and I don't blame anybody personally because I've probably been here at one point, but the question that frustrates me is, can I get in? Or is it too late to get in? And that shows two things. And I hope it's number one. It shows either that the person is brand new and they literally like they don't know what's going on. They're really confused. Maybe in their first couple weeks, months of trading, and they don't have a ton of personal experience. But sometimes it's number two, where you're asking me, can I get in? What's going on? And that shows a lack of confidence, a lack of knowledge, and a lack of understanding what's going on the charts. All right. So a better question to ask is, hey, why did you get in at that point? What made you get in? What indicators did you use to confirm? What were your confirmations? What is the bias of the market? How much are you willing to risk on this trade? Now, those are better questions. All right, I don't remember who came up with the quote, but they always said that you can tell the intelligence of somebody by the questions that they ask. So you guys are already doing great. You guys have asked me some phenomenal questions already off the bat. All right, risk management. Okay, somebody said fear. Like that's legitimate questions. All right, those are legit, and I appreciate the transparency because I've dealt with that. All right, we have the entry of fear of losing. When I predict great trades, I don't get in. And then when I do, I lose. How do I don't know how to accept the loss. Did I overcome this through the phase, and how'd you overcome? So we'll start there, then we'll navigate the chart. So we got the question of fear. So the first thing that really helps me trade, and this is just a golden rule of investing, period, you have to utilize disposable income. All right. When you're playing with house money, the fear becomes removed. And a lot of us make the mistake of trading with money that we desperately need. And we've been there. I've been there trading like, yo, I need to make this $100, $200. But when you trade with that, you're operating out of lack. The anxiety starts kicking up, and it's out of fear. Fear starts kicking in. So step number one is you cannot trade needing the money. It's like, why would you go to the casino and put your rent money or the mortgage money in the house? That doesn't make sense. And we understand that trading isn't like the casino where we have things in our power, things we can look at. But we also understand that it's not built for us to win. If trading was built for us to win, everybody would do it and everybody would be rich. It's a reason why trading is usually reserved for the banks, for bigger institutions, and a small pool of us are retail traders. And out of that small pool of us, only a certain percentage are successful. So you have to use money that you are okay with losing, because at that point it's all up. All right. The second thing is, when it comes to you losing trades, it either comes down to 2 points. All right. And my guy Hamilton say stop that a minute ago. I love that. This is the two reasons why you lose the trade. You either didn't know what you were doing in terms of maybe you just guessed, or you simply just got your analysis incorrect. All right. You got your analysis incorrect and it hit SL. It needs to be the second one. When we start losing because we don't know what we're doing, we're over leveraging, we're getting emotional, those are bad losses. Hey, if we say, hey, we're getting in for a buy and the market drops, but we have our SL locked in, we can live with that. All right. And that's the way how you eliminate fear. We get comfortable with understanding that, yo, we're not going to win every trade. All right. We get comfortable with this is house money. And we also get comfortable with we can go back and look. You need to be able to explain to me as your coach, as your mentor, or whoever you're working with. You need to be able to explain to that person, your accountability partner, hey, this is why I lost the trade. It's not because of what Nigel said or what the mark. Like, yo, this is what happened. I didn't check the news. I over leveraged. I got in a bad position. I got in too early. All right. These are all legitimate things. And I write those things down on a consistent level. I have a text message group. I'm texting my accountability. Even me, I have an accountability partner. All right. Accountability partner. You need to show your work. A lot of us, there's always a joke that we say, as soon as you take the screenshot, the money goes away. Anybody had that? Like you in a trade and you take a screenshot to show, you post on Instagram and show your homie, yo, I'm up $100. And then when you go back on the trading account, you're down to 80, you're down to 70. All right. That's the same mentality. So accountability partner is so critical. It really changes the game because you have to answer. It's almost like sports. All right. In sports, you have to hit the press stand. If most people, basketball is easy. If I'm playing basketball, even if you have no idea about basketball, if I'm playing basketball and I shoot one for 20, that's horrible. I shot 20 shots but made one. As a professional, you have to go to the media and explain what happened. And you can't say, oh, my coach. You can't say, oh, that, like, you have to say, yo, I was off. I got to be better. I need to work on XYZ. I need to work on this shot. I need to work on that shot. And it's the same thing with trading. All right. You have to be able to identify the mistakes that you're making. All right. Now let's do this quick activity. Let's do a transparent activity. And I'm going to participate as well. If you look at all the losses that you've ever had, all right, and we're going to hit the chat. You look at all the losses you've ever had. What is usually the number one reason why you lose? All right. For me personally, the number one reason why I lose is I don't take profit. Right. I don't take profit. I allow the trades that are kind of going well, and I don't move SL on the profit and the trade goes negative. All right. That's a big issue that I've had. I'm going to just keep it 100% with you guys. Entering too soon, over leveraging, rushing the entry. And you look like, yo, look at the comment section and we can see that this isn't an anomaly. This is something that is happening. Confidence, rushing an entry, over risking it. All right. And here's the good news. All of these things that are listed, these are fixable. These are fixable. It's not that you suck. It's not that trading's not for you. It's not that you don't know what you're doing. These are very fixable things. All right. I've noticed the longer that I trade, the more likely I am to lose. When I trade in a short time, 15, 20, 30 minutes, and stop, I see success. When we go hours and hours and hours, I start to see emotions kick in, natural greed, natural fear, natural desire to want more. All right. These are all real things. All right. Panicking when you see red and not waiting to trust it. Yeah, that's a real one. That's a real one. All right. I appreciate the transparency. The more I trade, the more I lose. Exactly. Trade less. Yep. Risk to reward. Absolutely. You may have to tweak your style. All right. I know we trade at the 9:30 slot, but you may have to wait a few minutes. You may have to wait for the up and down rush. And these are all correctable things that you have to take accountability for. All right. So let's go ahead, man. We're going to go ahead and jump to the charts. I'm loving the call, loving the energy. All right. Whew. Let's get it, man. We're going to go ahead and pull this up. All right. We got the trading view locked and loaded. Everybody should be able to see my screen, man. Yo, I'm proud of you guys. Everybody watching this call, sharing dedication. All right. Not only sharing the dedication, but just being that example. All right. And that's what it takes. So this is literally a blank chart looking at NAS100. All right. We got a few lines on the screen. These are some things we were looking at today. All right. One of the main questions that I got, I'm going to go ahead and check the chat one more time, is you guys were asking about risk management. All right. How much to risk? Like what's going on? All right. Let's kind of break down and put some visual things in front of us. Some of us are visual learners. All right. Anybody a visual learner? Some people listen by hearing, some people learn by seeing visually, some people learn from experience. All right. But we want to tailor it to all learning styles. All right. Let's keep it basic. Let's just say you have a $300 account. All right. This is just me personally and my beliefs. I genuinely believe with the $300 account, when this is live, all right, I'll give you guys a funded example later. And this is just me. This is how I operate. You may have to tweak this. On a $300 live account, I am usually going for at least 5%. All right. I don't believe in 1% on the small accounts. I don't think it's worth it. I think on a smaller account, especially if you're trading indices, that's so easy. Like 1%, that's hardly anything. I think that's what, $3. That doesn't add up. So for me, it's like I need at least 5%. And on a good day, I usually shoot for 10%, and that's the goal, right? And I do this activity with some folks that I work with one on one and people through the years. It's like, yo, how can we break this trade down? All right, you guys need to be able to know the math like this. You need to be able to say, hey, I have $300 in my account, I want 5%, and these are how many trades I'm gonna do to get it. All right. And as your teacher, as an instructor, or your accountability partner that's asking you this question, if you're not able to spit these numbers off, you are behind. You are significantly lowering your chances of success just by not having this. All right. So let's talk about it. We're talking risk management. So the goal is 5 to 10%. All right. So 5 to 10%, 10% is $30. So that's $15 to $30. That's our goal. All right. And don't look at the amount of money. Some folks are like, oh, okay, that's not a lot of bread. All right. Y'all already know I can get on a whole rant about what we can do with $15 to $30 a day. All right. Because if I was giving it to you for free, you take it. All right. If I was giving you $150 a week, you take it. No doubt. All right. If I was giving you $600 a month, you take it. No doubt. All right. $30 a day, $15 a day. That's the goal. And so, how I like to break this down is, for me personally, with this type of trade, I can really only have, and let's just stay with Nas here. All right. I know we trade other trades, but this is a what? NAS100 trading. I can legitimately really only, you can do 3 entries, of course, but I would really only mess around with 2 entries. All right. I would only mess around with 2 entries, obviously a point oh 0.01 and a point oh 0.01. I would not drop the point oh 0.02. And that's risky. It's heavy. You know what I'm saying? It's great if you get in and it's going your way, but it hurts if it's not. All right. 2 entries at a point oh 0.01. All right. And how I like to break this down is I need to have a number that I'm closing automatically. Because what I've found, let me know if this is true for you guys. I've found that most of these trades are not going red and just staying red. All right. Most of the trades are going blue, maybe hitting TP1 and giving a push, and then they come back. And this is a real example of what I do. Sometimes I trade on a $300 account. All right. And what I'll do if my goal is $30, what I would do is I would say $5, all right, equals an automatic pull. All right. $5 equals an automatic pull. What does that mean? This is where greed can kick in a good way. All right. Automatically, if I see $5, I'm taking my money. All right. I'm taking my money. All right. And what that means is usually you'll get 5 or more. All right. And quick math is that just needs to happen 6 times. All right. And usually you'll get a little bit more than $5. Usually you get 7, 8, 9. Because what happens, don't just stop at 5. That 5 will flip to 6, 7, 8, 9, 10, 15. So those are usually about 4 to 6 times. All right. Especially if you do 5 to 10, you're already there. Sometimes only 3 times is needed. We're trading early for NAS 100. The reason why is because we have a ton of volatility. All right. $5 to $10 automatic pull, because most people, especially if you've been doing this for a minute, you're getting blue. You're getting $5. You're just not pulling the bread. You're getting $10. You're just not pulling the bread. All right. You're doing that 3 to 5 times. Your goal is literally hit in less than a few minutes. All right. We've done the math. In the 30 minutes of NAS 100 opening, the chart is moving over 150 to 200 points up and down. All we need, if you just do the math, let's say 5 times at the max for what's 30 divided by 5, 6. All we need is 30 points total. All right. And this is happening zigzag in the beginning of the session. So this takes a level of discipline, finger on the trigger. I recommend trading on a desktop. All right. And then when it comes to the risk management, the question is, okay, when do I pull? When do I stop? All right. My SL is usually, all right. And now this is backwards. This some people's like, well, this doesn't make sense to me. I'm just telling you how I do it as a scalper. If we're swing trading it, I'm gonna go by the book. I'm gonna go a 3-to-1 trade. But as a scalper, I am confident in this trade going blue. The key thing is taking my money. So each move for me, I usually will go $15 SL, 15 points. If I pop 2 entries and they hit negative 15 twice, done. It's at least a 1-to-1 goal. Some folks that may be too much, but the reason why I have it this deep is because one, it's easy to recover. All right. And two, it gives you room. All right. It gives you room to have a re-entry. All right. But if this doesn't work, you may have to say, hey, look, man, I need to go $10 SL each one and give myself 3 entries and 3 chances. You see how we can tweak the numbers, but it just depends on your style. For me, if I go 15 points in the hole, close it, reset. All right, look to get another one, pull $5 3 times back in. All right, this is how it goes when it's super fast. The risk management is hitting. All right, and I'm going to give you guys a few examples. You guys see this here? Feel free to lock it in, screenshot. All right, and so let's go into a few examples. And of course, there'll be questions at the end, no doubt. All right. And this is something I talk about. We're looking for we like to see what I like to call a ping pong area. We want to see where the market has an area of consolidation where we're seeing consistent up and down action. And then eventually what happens is a breakout. All right. We understand that. All right. So let's go ahead for my visual learners. We're going to put a line and we're going to make this line orange. All right. And so for this orange line, we can see consistently when the market hits this level, we're getting some level of a buy. All right. And this is every 5 minutes. If we go down to the 1 minute, you'll see more and more and more and more. It's giving you one opportunity, two opportunities, three opportunities, four opportunities. Every time it hits this point, it buy and then eventually takes off. All right. These are moments just as a trader, I'm peeping this and I'm like, okay, it's having a tough time breaking this point. As a trader, I'm now looking at the market structure overall, seeing where price could go to, and I'm confident. I'll say, hey, look, the trade, we're hitting a lot of rejection here. This is my buy entry. We're going to take this thing as low as we can. All right. And then our TPs are way at the top. All right. And you have to have that vision. You have to see the move before it happens. And here's the cool part. My SL is so tight. We're like, hey, look, we haven't been able to break underneath this point. All right. So the worst case scenario, we will lose 8 points. We'll lose 7 points. We can take that. And then what I'm saying here as a scalper, especially if you're trading on a computer or one entry at a time with your finger on the trigger, you're able to get, if you're like sniping it, guys, if you have it drawn up, that's why it's not like trade with emotions. You understand it's a buy. Not all buy is a good buy. If you buy up here, now I got to wait 20 minutes to come back. I hate that. All right, that happens to me. You like that it's going up and you just hit the buy button instead of, hey, I understand that this trade is going up, but let me try to catch it at the bottom, or let me at least try to catch it on its way up at a favorable position. And that's how you eliminate a lot of stupid mistakes. All right, be patient when you want to get in, especially if you don't see the market clearly. Sometimes wait a minute. Sometimes what I do, if I believe I want to get in, I'll go ahead and set a limit move. All right, we know a limit is when we set the trade back so it can go up all right, or we set the trade up so it can go down, all right, buy or sell. Sometimes I'll set a limit just because I know that the trade will probably go back 10 points. Just saving yourself 10 points. And if you're wrong, hey, you're wrong. You don't lose any money. All right. And that's how I attack it from a risk management standpoint. All right. Kate said, this is extremely helpful breaking it down this way. I noticed when there's an obvious floor ceiling that you're trying to break, but there's multiple opportunities to buy again. And then, yeah, exactly. So I love those are my favorite buys when it's just tapping the floor. And I'm like, yo, like literally, and we will confirm it by looking at what? Moving averages. We were confirming it by what? Looking at market structure. There's a lot of confirmations we use, not just a feeling guess type of thing. All right. Start at the high hours, but when we're scalping, guys, we want to navigate to that 5 minute, that 1 minute, and see where the consistencies is hitting that level for a reason. A lot of times there are bigger players at play. All right. There are bigger fish in the sea. They're sharks. These banks, they're coming in and they're tacticians. All right. They're looking at certain prices and they're entering. Poof, market goes up. It's not on accident. All right. Not on accident. So when we talk about breakout trading, I know we kind of talk about that terminology before. Breakout trading is you trading on the breakout, you playing the floor, all right, but you're getting in on that last leg. It's like a W. Boom, 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 and you get on that last leg. Like W trading and M trading is so important to get out on that breakout. And if you're wrong, that's something that you can live with because you're getting in at a low point anyway. So if it tanks, you humbly close the trade and you reset. All right. That last leg on that W is so critical. You see it right here. All right. And I'm loving the breakdown, loving the breakdown. All right. We got a question. So, what if, so with a buy limit, can we set the entry and it reverse and will not activate or will trigger a SL? So, with the buy limit, it's a great question. So, let's say in this situation right here, like, yo, I believe the market is still bullish. I believe it's still going up. All right. And price is at, let's go ahead and name it. Let's be specific. All right. Right here is when most people are thinking about getting in. All right. So you got that buy there at 15,178 that you're thinking about. All right. So that buy limit for me is we're saying, hey, let's pull this thing back 10 points, 20 points, whatever that situation is. Let's say you pull it back 15 points. All right. And now you're getting in at 62 on this buy limit once the market is coming down. All right. And you can see clearly that you don't have to hold it as long. But the real thing is, and this is just, I actually love this example. This is actually a bad buy limit, and this is a bad buy at the top. There's clearly structure right here. There's clearly a level of resistance and a floor being met. Why not just go straight to the floor? All right. Why not just have the buy limit right here at the bottom? Hey, right there at 46. And if it breaks through and we lose 6 points, that's a good trade because the upside of this, and this is just long term, right? The upside is, hey, if this is the last leg, this thing now has the potential to push 20, 30, 40, 50 points. And those are the runners. Those are the easy days. When we get in here, these are the easy days. All right. So I hope that makes sense. Right. I hope that makes sense. So we've talked a little bit about risk management. We've talked a little bit about fake outs. All right. I want to address confidence. All right. In understanding where the price is going. All right. So what are some things that go into this? Let's break this down again. All right. So how do we know like what we call like the market bias? All right. How do we know that? All right. One, we want to go ahead and check market structure. All right. And when we say market structure, this is like literally how the market is built. Where the supports, where the resistance. All right. What's the trend? All right. So let's break that down. We talk about trend, SNR, support and resistance. We're talking about trend. All right. We're also talking about seasonality. All right, seasonality. What season is it? What time is it in? Like those are all things that go into market structure, right? Because market structure also means, hey, it's 9:30. There's a tendency to buy up. All right. Obviously, next when it comes to bias, we're checking news. All right, and we are also understanding the history. Usually, what happens is the same thing will repeat itself through the week. All right, the winners are the ones that pay attention. All right, winners are the ones that pay attention, locked in. All right, I love it. So we went over a few concepts, talking about market structure. Again, that definitely is a whole video in itself. But generally, when we think about market structure, again, we're looking at trends. We're looking at moving averages. Where, like, how is this thing built? Is it built like an M shape that could happen? Is it built like a W? Is it built like it's zigzag, like it's constantly going up? Those are things that help you understand where the market's going. All right, I love it. I love it. I love it. All right, guys. At this time, yeah, I definitely want to take a live caller, anybody that wants to give any feedback for the session, any specific questions. Um, Mallory asked buy versus buy limit. A buy is when you get in immediately, you hit buy. All right, that's a market execution. A buy limit is a pending order. All right, it's almost like, hey, it's an if then statement. If the trade hits this point, then we enter the buy. All right, so buying is immediate, it's market execution. A buy limit is a pending order. All right, but feel free to raise your hand. Feel free to come off mute one at a time. We'll take a couple of questions, feedback. All right, questions. I definitely want to hear from some folks live, and it could just be a thought as well. All right, anybody, feel free to come off live. Go for it. All
Hi.
right, yo, talk to me.
Hey, I wanted to ask, I noticed on your trading view at the top, although we're in NAS, what are you using? Are you using a Wanda, a Black Bull, or what?
Yeah, that's a great question. So this is literally FX Open. All right, the symbol here is NDQM, and the reason why I use that is because the price is more accurate to the brokers that I use. I've noticed that Forex.com and like some of the other NAS pairs, they don't always reflect the broker that I'm using, and that could cause confusion. A lot of times I'm using KOT or Hugo's or Sway, and they don't always reflect. So that's why I've been using this. It's a great question.
Thank you.
All right, no doubt, no doubt. Zane, feel free to jump in.
Hello, this was my first time watching your live session, and as for feedback, I think it's incredible. Found it really helpful. As for a question, at the beginning, you mentioned points and pips. I'm just beginning to sort of learn how everything works, and I understand for currency pairs what a pip is. Can you just explain what what this what the point thing means? Because I'm not entirely sure.
Sure, guys. This is a great question. So everybody can see NAS100 or any indices. Let's just go ahead and put indices, points versus pips. It's very easy. Let's say we have a $200 account. We enter with a zero point zero 0.01 lot size. Everybody should be with me so far. That's the smallest lot size that you can enter on a standard account. All right. And so all this means is when I enter a 0.01 lot size and it moves 10 points, all right, that's literally 10 points. So you look at the price now is at what? 15,297. 10 points literally means, hey, the price is going from 15,297. Let's say we're getting in for a sell. Literally, then it goes to 15,287. All right. And 10 points in the language of indices actually equals 100 pips. All right. So I use points because it's easier to understand. You don't have to do any math. You're looking right at the number. Somebody say, hey, we made 100 pips on NAS. That means they made 10 points. With a 0.01 lot size, that now means you made $10. All right. And let's go ahead and test the knowledge. So we got this. Take this in. I'm going to give another example, and this time I'm going to ask the group. Don't say it out loud, but I want you to go ahead and just drop it in the chat. Let's say you have a $300 account. This time you trade with a 0.02 lot size. All right, and let's just say the price, we enter a sell. All right, some folks about to knock this question out so easy. Let's say we enter a sell at 250. All right, and our take profit is, all right, this number right here. Okay, my first question is how many pips is this? All right, how many pips? All right, $300 account. Okay, let me break that down. $300 account and a 0.02 lot size. All right, how many pips is that? All right, really quick. This could be a whole video or the whole thing, but we're breaking it down real quick. All right, we sell at 15,250. Our take profit is 15,230. How many pips did we win? All right, how many pips? Some Oliver answered with points. We said pips. All right. 200, easy money, 200. All right, now next question here. You're hitting y'all with that math. Y'all see how the math, like, yo, okay, seventh grade algebra is kicking in. All right, with a 0.02 lot size with this same amount, if we hit TP, Now, how much money did we make? How much money did we make? All right, how much money did we make? All right, 0.02 lot size. We went from 250 to 230. All right, anybody know? Anybody know? All right, exactly, guys. $40, literally $40. All right, hopefully this is helping. This is the style how I usually teach. Very much hands-on, very much like I'm a quizzer. I believe in, I want you all to be sharp. I want you all to be tacticians. All right, I love that. I love that. So we have time for one last question. One last question, then we're gonna jump, man. So anybody, feel free to jump in. All right, and then we're gonna go ahead and slide. All right. All right, Oliver, you can jump in if you need to, boss. The mic's open.
Oh, okay, sorry.
No doubt.
I just started. That's my first time here tonight, and I've been trading forex, and I'm just trying to learn everything. When you're doing market structure, uh, do you start doing just like in forex, or is different?
I'm not understanding your question. Are you asking me, do I
So
do market? Yeah.
yeah, like first and forex we do like the trend hits, then we market
Oh, yes.
low high.
Yes, yes.
Do
The
we
same.
start doing the charting the same way?
Yes, same way. No difference.
Thank you.
No worries. No worries. So I just dropped the equation. Mallory asked, what's the equation? 1 point equals 10 pips. So if we made 5 points, that means we made 50 pips. If we did 10 points, that means we made 100 pips. I always do points because it's easier to understand. But in the Forex world, they go by pips. All right. And you see they're weighted heavier. All right. So that's why it can be tough. Mallory said the lot size is confusing. So it's actually easy to understand that in indices as well. Mallory can talk about this on the side, but a 0.01 means you make $1 for every point. A 0.02 lot size means what? You make $2 for every point. All right. So for every tick that it goes up, every point, you see this 15,300. If we pop a 0.02 and it goes from 15,300 to 15,01, that means we make $2. It's very straightforward. Okay, let's get it. Let's get it. Let's get it. All right, family, excellent call. Hope you guys were able to take away some things. We talked about risk management. We talked about lot sizes. We talked about news. We talked about market structure. We talked about risk management. We talked about all of those things in a packed 30-minute time frame, family. I'm proud of you guys. Let's get busy on the session. Let's continue to get money. Let's get it. We're out of here, man. Peace.